last one for the week. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channel Television. I'm Ladi Williams. It's great to have you join us. Let's kick off your Monday morning now with oil markets. Now, we see oil prices fell as concerns that widening COVID-19 curbs in China will curtail demand, offsetting signs that output at the top U.S. shale field is losing steam. Futures dropped 36 cents to $95.41 a barrel after slipping 1.2% on Friday. U.S. West Texas Intermediate crude was at $87.67 a barrel, down about 23 cents after settling down 1.3% on Friday. Wider COVID curbs in China invariably raised concerns over demand from the world's top crude importer. And Chinese cities are doubling down on Beijing's zero-COVID policy as outbreaks widen, dampening earlier hopes of a rebound in demand. And still on the issues of redesigning the Naira, the Minister of Finance, Budget and National Planning, Zainab Ahmed, declared that the Central Bank of Nigeria did not carry her ministry along in its plan to redesign and roll out new 200, 500 and 1,000 Naira notes effective December 15th. Well, let's take a listen to what the minister had to say.
We were not consulted. It was an announcement that we heard. And I've seen,
you too, you just saw the press release like every other body.
Part of the reasons that was advocated is that's one of the ways to mop up liquidity to manage inflation. But there are also consequences that we're also looking at. What would the consequences be? There will be some benefits, but there will be some challenges. And I don't know whether the monetary authorities have actually looked very closely as to what the consequences are and then how they can be mitigated. So I still advise that you have that discussion with the monetary authorities. Not as the fiscal authority. Yeah. First of all, as a fiscal authority, we were not aware of it. It was an announcement. Secondly, I think that's one of the ways that they're trying to use to manage inflation. But there are consequences that also need to be considered and how to manage those consequences.
Well, the conversation is still ongoing now. Let's talk to Femi Onakere, MD, News and Anchor Solutions. Join us via Zoom. Great to have you on the program.
Good morning. It's great to be.
Yeah, so, we still have the issue that was trending all weekend, and obviously it's going to spill into this week. What's your take, on the minister's response?
Well, I don't think there's a lot of issue regarding the position of the CBN and the carrying along that the minister said. The CBN has autonomy. It's been removed from the authority of the, the Ministry of Finance. So, and issuing currency is one of the primary remits of the CBN. What the CBN needs to push that across is to communicate with the presidency and get its approval. Now, she does have a point in terms of being carried along, being responsible, the ministry being responsible for the fiscal policy management end of it. But I think that is a down-the-line shot and does not have any bearing significantly regarding the, the requirement to redesign the Naira.
Right, and a couple of analysts have responded to this, given different reasons why this could work or not work. But what do you think the impact would be on inflation?
The good thing about this is that one, it's a left-sided approach, a left-side strategy to managing inflation. We have a serious liquidity problem. Despite all the efforts of the CBN and several financial inclusion initiatives, we still have a largely cash-based economy. And if you have a heavy cash-based economy and you cannot track the flow of cash, you have cash trapped in different areas, then you have a big problem in managing inflation. Now, the traditional way of managing inflation really is to increase interest rate, try to mop up liquidity and all. But like I said earlier, if you cannot track it, then you cannot really present anything. Your attempts will just increase. In fact, it will just help inflation to get even much higher. So this approach from the CBN has the dual effect, right, in my opinion, of compelling people to bring in their cash. So now we will now have a track of available cash, and it's going to be a managed sequence. We can track what is in the system. So every time you make a deposit, right, we know we have mopped it up, and when you make a withdrawal, we give you the new notes. So now we have a clear understanding of the volume of cash available moving around, well tracked. And I think that is a laudable cause. The other part is it creates some form of demand, right, for the Nairas, just stemming inflation, at least in the short run, while other monetary policies kick in, and the MPR decisions also kick in.
All right, thank you so much. That was Femi Onakorena, MD News and Anke Solutions Limited. Thank you for your perspective on the show.
Thank you.
All right, now, so after the break now, we'll be looking at, the flood issues we're having in Nigeria and climate change, the impact and how to mitigate most of the impact businesses are going to experience with all of this. That's our next conversation. Do stay with us. This is Business Morning. Welcome back now to our next conversation. According to a recent report by British International Investment, about 58% of businesses in emerging economies in Africa and South Asia have suffered from the impact of flooding, storms and droughts over the last year. The accelerating pace of climate emergency shows that more businesses in emerging economies are being impacted by extreme weather events. For more now, let's talk to Dr. Salisu Dahiru, Director General, National Council on Climate Change, joining us from our Abuja studio. Great to have you on the program.
Thank you and good morning.
Good morning. So with what we've seen, so far with floodings in Nigeria, some say this could have been avoided. What do you think?
Yeah, to some degree, some aspects of it could have been avoided, but on a larger scale, as far as climate change is concerned, avoiding climate change at the moment is a little bit difficult for the reality of the situation, rather. Responding to it and adapting to it and helping to reduce or minimize its impact is the most ideal response globally. Because if you look at the issue of climate change, it's not just an abrupt development. It's something that took several years to build. So reversing it or halting it is really going to be a difficult deal, on the long run.
And it's over about 10 months since President Muhammadu Buhari appended his signature on the climate change bill, making it an act. What progress has been made since then?
Yeah, first of all, the after the signature of that act, sometime towards the end of July this year, the president kick-started the implementation of that act by the appointment of the DG, who will serve as the chief administrative officer of the council, and then inaugurated the council in September. And from then onwards, been a new entity that is an indication of the commitment of government to really take the bull by the horn with respect to Nigeria's response. The council began internal discussions and consultations within and among key players in the climate change discourse and development within the country. And so has prepared, together with the parent department of climate change, which is domiciled in the Federal Ministry of Environment, to put a good program of work that needs to be implemented, beginning with the Climate Change Conference of Parties, number 27, which is going to take place in Sharm el-Sheikh in the next 1 week thereabouts.
And obviously, this requires, participation from everyone to help, mitigate the impact of climate change right now. But what kind of conversations are being had, with, creating some kind of synergy, in solving the issues?
You see, first of all, in the course of these discussions with key players and these internal dialogues, we did understand that a lot of things are happening, particularly in the private sector. A lot of specific steps are taken. Some of them are even aligning their development agenda and trajectory within that of government, particularly remembering that the president, at the end of COP26 in Glasgow, became one of the few developing countries to really set a net zero agenda for the country, which is 2060. And so the government kick-started these processes, one of which is the launching and takeoff of the energy transition plan, as well as the commencement of the process for establishing what we call the emissions trading scheme that is going to harness some of the proceeds from the several ongoing initiatives in climate change adaptation and mitigation in the country to harness additional resources for climate change development in the country. So what we've done since then was to do some kind of stock take, bearing in mind that a lot of the things that have been happening shows that we are even underreporting, because the private sector initiatives that have been ongoing for some key players, both in the oil and gas sector, as well as within NNPC and also within the food and beverages, have really indicated that they are doing a lot more than what comes to the surface. For instance, there's one of them that of all its facilities, 4 of them, 3, that is more than 75%, are now running on solar energy. And this is not well captured, and this is supposed to be input into the Nigeria's obligations under the nationally determined contributions, or NDCs.
Right, and looking at energy transition for countries like Nigeria is obviously going to be an expensive venture. With the Climate Act, how is funding coming together to make this actually a reality?
In fact, that's one of the beautiful innovations that the Act has envisaged and really put in place. One of the major challenges that Nigeria has experienced in the last couple of years with respect to response to climate change has been that of the technical know-how, as well as the technology, and more importantly, the finance. So the Act put in place specific steps and programs that will ensure that these 3 challenges are addressed. One is to have a national climate change fund, which will be there as a suppository and a repository of funding and financing, both from the budget as well as from development partner contributions that will go into it, and it will be kind of shielded in such a way that it will provide continuous, readily available funding for climate change activities. In addition, the Act also empowered the Council to work in collaboration with Federal Inland Revenue Service to develop a carbon tax system for the country. And this is going to be hinged upon the fact that a carbon budget is also going to be established and developed for the country that will give emissions allowances for entities. In fact, it did not leave anything untouched. Entities or companies that have staff up to 50% are expected to report their climate change reduction actions, and therefore, based on this carbon budget, entities that are able to live or meet those obligations by keeping within the allowances that are going to be given to them will get rewarded. And if you go over these allowances, you get penalized, and there are also going to be these taxes that will go into the carbon fund. In addition, we also have opportunities as enshrined in the Act, to establish a carbon market. And that carbon market would provide opportunities to earn carbon credits for a lot of the activities that individuals and entities and corporations, including government, will be doing in the area of climate change mitigation and adaptation. And this carbon credits could also feed into the climate change fund. So you could see that the issues of the climate finance is a very serious one, and it will help to ensure that majority of the interventions, both at federal, at state, and also at local government, will have some sustainable stream of funding as we progress.
And obviously, are there any risks, to this funding? Because right now we see we're not, meeting output with oil production, even though we're trying to move away from, dirty alternatives. What other risks are there to actually making sure that this funding, for energy transition is actually happens?
Excuse me. I think one major factor that we need to highlight is the fact that, look, globally, every country has realized that climate change is here, and we cannot be left out in this drive. Yes, it is true that we do not emit as much carbon emissions that lead to climate change compared to developed countries, but we are bearing the brunt of climate change effects. We've seen with the massive flooding that has affected Nigeria, as well as other countries such as Pakistan, Bangladesh, and even the floods, the drought in Europe for the first time. So it is duty bound, on every nation to be able to contribute its own quota. And the energy transition plan for Nigeria is one major pathway that Nigeria intends to address the twin problems of energy drought and then the issue of climate change, so that we are able to meet that 2060 target of net zero. And alongside the specific steps towards its implementation, there are absolute opportunities for climate finance to really flow into the country because developed countries are also bound by the climate change agreement, particularly those the Paris Agreement and those before it, to offset some of their carbon emissions through the financing of projects in developing countries, as well as providing support, of which a number of them have actually pledged this support. And these supports are not only just merely in cash, but some of them are in kind. And they do include capacity building and enhancement, and then upgrading and resuscitating some of the moribund, industries that are high emitters or polluters, and then also providing opportunities for financial flow and technology to support developing countries. So in terms of risks, probably delay or inability of these developed countries to meet the pledges that they've already made and recorded over time, going as far back as COP15 in Copenhagen in 2009, where a minimum of $100 billion annually has been pledged. But most of these countries are really backstepping, as we used to say in Nigeria, and not meeting up their pledges. So the opportunity for Africa and other developing countries is during COP27 in Sharm el-Sheikh, these pledges for financial support as well as technological support will be in the front burner for the discussions.
Right. Well, I guess educating the masses also on and to streamline the activities, to also try to make this an easy process, must also be conversations you're having. But thank you so much, Dr. Salisu Dahiru, DG, National Council on Climate Change. It was great having you on the program.
Thank you so very much. It's my pleasure.
Thank you. All right, still ahead on Business Morning, we'll look at the impact of electioneering on business activities right here in Nigeria. That's the next conversation. Do stay with us. This is Business Morning. Welcome back. Well, it's Nigeria gearing up for upcoming 2023 elections. There are fears that many public officers may be distracted by electioneering activities to the detriment of project implementation and economic growth, and businesses will definitely feel the impact. Let's talk to Onasemi Emmanuel now. Lead partner, Cardinal Professional Services, join us right here in the studio. Great to have you.
Thank you, Ladi, for having me. Thank you.
So we got that projection from the IMF, stating that we'll grow by about 3.4% in 2022, but for 2023, they say a decline for about 3.1%. What do you think?
Yeah, that's one of the biggest considerations that the economy needs to be practical about and our government needs to be up and doing about. The expectation is that based on this projection, IMF also emphasized that being an election year, there are some things that will slag, and then government may not be able to respond as necessary because of some electioneering interest, that may be very destructive. What is then expected is that, for the businesses to thrive in an environment where such projection is, there should be some expectation from the government to make sure that electioneering impact do not affect businesses in a negative way. And the way I want to look at it is to say, electioneering activities are also economic activities in a sense. So
some businesses will profit.
Yeah, they are also economic activities in a sense, to the extent that some industry sector will definitely service those activities. You want to look at it from entertainment. The entertainers will definitely go back home smiling this season. You want to look at the events and crowd management planning, security planning, security management. You want to look at logistics, and then you want to also look at transportation, aviation, people traveling up and down for campaigns. Then, we expect
the photographers.
Yeah, the photographers, you understand. So we expect the MBS reports, subsequent sector, to reflect this improvement in this segment. So in the totality of the picture, it's not all the way gloomy, but what we may then need to evaluate is to say, from the benefit outlook, do we really think the benefit outlook outweighs the cost outlook when we look at other businesses playing in the Nigerian environment?
And we know that manufacturers now are struggling with, FX at this time, and we saw what happened, over the weekend, with the Naira, after the conversations about the redesigning, of the Naira. What do you see going forward for manufacturers?
Yeah, because the truth is that the real production sector really needs forests to thrive. Following from the scarcity, the CBN has been struggling a bit to, shore up forests to support the real sector. But that this electionary period, even prior to now, we can see what happened during the primaries when the demands on the forest, wherever the sources came from, we may not be able to discuss, but we know that that translated to some impact on the further devaluation of the Naira after the primaries, and we are moving to the period of the election proper, where we know that there will be more demands and coming because of election-related activities, and they need to meet those demands. So we also, from the outlook, the rich sector, reproduction sector, needs to practically put in place strategies to mitigate this impact on their production activities. They may then have to start looking elsewhere for where to source forest from in order to continue production, and that is the reality of what we have on ground at the moment, because election-related activity will definitely act a toll on the little or nothing reserve that we currently have at the covers of the CBN.
Quite interesting. And, we did see the CBN governor also say the redesigning is also going to help, with the issue of vote buying. and obviously, from what's happened with other countries, like take for instance India, that actually demonetized, some of their currencies, we saw the poor, actually suffered, in those economies. And I'm wondering, what can we expect here in Nigeria?
Yeah, redesigning the currency, CBN has their own outlook, but the way the public interprets it is also different. We saw one of the major spokesperson in the media, Gumi, speaking about, the fact that terrorists may start demanding, bandits may start demanding, ransom in USD if you redesign the Naira, So the truth is that...
with the FX shortage.
you understand, which will further impact the efforts. And looking at the everyday common man, you want to also look at it to say, okay, you are mopping up the currency within the economy. How quickly are you able to replace it, with the new Naira notes? And to be the truth be told, Nigerian politics as of today is still cash backed. Many things are transacted based on cash. So whether you like it or not, there are some powers that will get the cash out for the purpose of these. So whether you have a good intention to kind of limit vote buying, I doubt if you are able to achieve that with this measure. And
how do you see this impacting, merchants that actually depend on cash transactions at this time? Are they going to just say no, to cash at this point?
Well, there's been this drive for Nigeria to go cashless, and transaction has been improving year on year with some significant progress on how we are progressing towards reaching towards the totally cashless economy. But we can't take away the fact that there are some petty trades that are still operating on cash, and you may not be able to take those out of the economy as of now. So the truth is that the CBN needs to look for a way to support those businesses. We've seen the introduction of POS merchant solutions, and whether those people have been included, and we have a lot of inclusiveness with them. But the truth is that the inclusiveness status is not at 100% yet, and the economy will need some cash, to continue to flow. Otherwise, you may be killing those sectors which are largely informal. Yeah.
And we still have rate hikes, coming. And right here, we know the central bank and the MPC, they don't look like they're going to be dovish, anytime soon.
Yeah.
This is still obviously an issue businesses are dealing with, coupled with, electioneering activities.
Yeah, for businesses generally, I would love to, from an electioneering activity perspective, one of the things that you need to look at, particularly if you're a business, that you have some government-backed contract, bankrolling your activities, then you have to be a bit more strategic this period to ensure that, the impact of electioneering activity is not significant on your business. So what will definitely be happening is that, there are some government projects that are sellable for electioneering purposes. Then you see government fast-tracking those projects so that they can bring them out this period to show the people that we have delivered these, So people that are into the sellable projects may be able to get some government support, get funds to make sure that those projects are delivered. But if you are providing services or contracts related to non-sellable projects, for example, look, the government itself has come out to say that the COVID-19 Action Recovery Plan will have to be put on hold because of electioneering activity, because it is not election sellable, you understand? So as a business, if you have a contract, a government-related contract, you have to reevaluate your portfolio and say, what are the measures that I have to put in place now to mitigate the impact on my revenue, impact on my operations, and my going concern generally.
Right, so much to look into there. Thank you so much, Onasimi Emmanuel, lead partner, Cardinal Professional Services. Great having your perspective.
Thank you very much, Ladi, for having me.
Thank you so much.
Yeah, great.
All right, there. So we'll be talking about the impact of electioneering on businesses right here in Nigeria, and we had Onasimi there talking about how business can actually streamline the activities to actually create some kind of buffer, for them. Well, we're going to be going to the markets now. We see last week was it was looking like it was going to be positive, for the equities market, but we did see that decline, at the last minute, and we have Anite to come and tell us what to expect, for this week and what's happening in the other markets there. Anite.
Yes, good morning, Ladi. Happy New Week and the last day of October.
Yeah.
Finally.
So how's it looking?
Well, let me bust your bubble first. It's negative segments across all the markets. The fixed income market, bearish, the Forex market, the equities market, as well as the unlisted securities. So that's how it turned out.
Yeah, my bubble is burst, right, actually.
Yeah, your bubble is burst. But of course, you know, what's good for you may be bad for some others and vice versa.
Right.
So, but with that being said, let's go straight to the Forex market. As at last week, this is how it turned out. Total value was down by 21.17%. That's what you see there at $566.74 million. That's in contrast to what we had as at last week. So across that board, $362.10 million. That's what the week turned out for the final week of October. Of course, today is the last day. Negative segments across board there. Now let's move over to the NAFEX. NAFEX, the Naira, of course, it's been in the news. The Naira has fallen to its lowest level, particularly at the official NAFEX rate. Now, if we can have the NAFEX rate there for us to have a closer picture. So that is how it was. This is how it was in the previous 440 Naira, 76 copper. But then this is how it turned out at the close of last week, 441 Naira, 63 copper. It was down by 0.20%. Of course, not too much good news for the Naira, which has been taking quite a lot of bashing on a lot of factors. Some factors are beyond your own, my own comprehension. So now over to the stock market. The stock market, it started the week positive, but this is how it turned out at the close of the week. Yes, we had 3 positive segments and then 2 negative segments, but this is how it turned out for last week. No thanks to losses from Dangote Cement as well as Airtel Africa. Those 2 market behemoths had a very significant impact on the market, which you see the all-share index has fallen all the way from the 44,000 level, which it was within the month. And then as well as the equities cap, it has also fallen from the 24,000. But bear in mind that as at September, the end of September, the all-share index, it was 49,024.16. And then the equities cap was at 26.451 trillion naira. Now to give us more insights into the market, let's talk to Samuel Bamike, is investment research at Meristem Securities Limited. Thank you for joining us, Samuel.
Good morning, Aniti. Thank you for having me.
Yeah, happy new week. Okay, now we know that there's a correlation between the fixed income market as well as the equities market. So I think I'll start with the fixed income market first. The fixed income market across the treasury bills and the bonds market, it was down. Of course, we also had a primary market auction by the central bank last week. So can you give us more details about what happened last week at the fixed income market?
Thank you very much. Last week, we had a primary market auction, and then we saw rates move on the 91-day, 182-day, and 364-day instrument. On the 364-day instrument, we saw rates move to about 14.5%, as expected. The attractiveness of the fixed income market still remains, given the various reasons that obvious reasons that have always been highlighted. I mean, the interest rate environment is high, so you would expect rates to go up at primary market auctions, and you see investors going there. Although we observed that subscription was low compared to the previous auction. Actually, at the various auctions held so far, we've been seeing decline in subscription, and that is not far-fetched. That is hinged on system liquidity. We've seen decline in system liquidity. At the last MPC meeting, the committee hiked CR out about 2%, and that has caused a squeeze on liquidity at the moment. So that's why we are seeing a decline in subscription. And when you look at the secondary market, the sentiment in the fixed income secondary market has been bearish. You see yields going up on both treasury bills and on bonds. I mean, investors are more, attuned to the primary market auctions. So we see sell-offs in the secondary market, and we are seeing that, rotation into the primary markets right now. And what we are seeing in secondary markets is basically cautious trading and, cherry picking of instruments along the short end of the curve.
Okay, now let me move over to the equities market, which has not been too good, if I'm to use that word. And at the same time, it's also coming as third quarter earnings are, flowing into the market. Are investors really keying into this third quarter earnings, when the market is looking down? Take a look at the sectoral performance here. What are investors' segments as we speak?
All right, so overall, the sentiment is still bearish in the market. Last week, we had a lot of earnings releases, and they were positive across various sectors. If you look at industrial goods, we had Boa Foods, Boa Cements releasing their results. If you look at consumer goods, the telecom sector, you look at the oil and gas sector, the results were relatively positive, but that positive reaction was not there. We still saw a decline in volume and value, and the year-to-date return declining to about 2.8%, and that is coming up from about 21% that it was at H1 2022. So we didn't really see investors react to that sentiment. The sentiment is largely bearish, and the factors are just there glaring at us. The confidence in the market at this moment is really low. Confidence is low, and that is because of the macroeconomic headwinds and political risk. Again, if you look at the markets historically, you would always expect that during a pre-election year, as a build-up year to election, you always expect that the markets, going by the trend, you would expect that the markets would be bearish because of that heightened political risk. We saw it happen, play out in 2014. Even in 2018, the market also closed down. I mean, the only different thing now in the market is just that we don't have as much FPIs as we have during those periods that I've mentioned in 2014 and in 2018. So, I mean, we are not seeing that reaction. Although for long-term investors, it would be a good time to go into the market because prices are relatively low and cheap. And if you look at the bellwethers that dragged the market last week, talking of Dancing, talking of Taylor Free, I mean, the prices, the valuation, according to our valuations, prices are low, which is a good time for long-term investors to go into the market. But overall, we expect that the bearish market would actually continue.
Okay, thank you for that information, Samuel. And of course, we will keep our eye on the market as usual. So that was Samuel Bameke, investment research at Meristem Securities.
Yeah.
Limited. So, Ladi.
Yeah. So still the search for the bottom continues.
Exactly.
In this market.
But if I have to tell you, I think just within a few seconds, I know we're going into the full election period. Of course, Yuletide is not too far.
Right.
And then, of course, the MPs, the CBN's MPC in a couple of weeks from now, they'll be having their final meeting for the year. So we see how all of that
rate hikes, everything, all playing into that market. Thank you so much, Anita. All right, now let's head on to London. We have Juliana standing by right there. Juliana, good morning. Great to have you. So there are indications that some households are yet to receive the first installment of government's energy bill support scheme. What's the hurdle here?
Well, that's absolutely right. I think, good morning, Laddie. I think one of the massive hurdles that the British government have is trying to access these particularly vulnerable people. Just to remind our viewers, the energy support scheme was first announced in May when, we were kind of in the height of the Russia-Ukraine invasion. Energy bills began to soar, and this was a blanket support scheme, so it was available for everybody, a £400 kind of rebate. So if you if you're paying for your bills via direct debit, which the vast majority of people in this country are, then what you'll be seeing from October to, I believe, March is that about £67 or £66 a month is coming off of your energy bill. But not everybody pays their energy bills that way, particularly if you're a migrant or if you're somebody who is vulnerable. You would pay with a card or a kind of stick that you put in to the meter, and when the credit runs out, you basically have no gas. So what has been reported is that last month about 800,000 individuals were entitled to receive these vouchers, but according to the post office and other stores that take these vouchers, they haven't received all of them. In fact, they've received less than half. I think about £30 million is outstanding, so quite worrying actually, and we are being asked to ask anybody, especially vulnerable viewers who are watching from the UK, if you are somebody who does use a prepayment meter, check your post, go online, because there is support out there for you. And so it'd be a shame if you're missing out on it at a time when you're in great need.
Yeah, support needed very much at this time. But what are the market moving data we're expecting for the week?
Well, there's only one big thing happening this week, Laddie, and it's definitely not a football match either. You know, according to the FT, the most hotly anticipated moment of the week is Bank of England interest rate decisions. Yes, that's just how where we've got to in this country. We're all really looking forward to that. But it is important, of course, because we know inflation is running at a 40-year high. We've got a new Prime Minister, Rishi Sunak, who's doing pretty well, I must say. He's kind of taken a couple of points, shaved a couple of points off the opposition Labour Party leader, Sir Keir Starmer. But yes, you know, for 7 straight months, the Bank of England has risen interest rates, and with it, risen up the cost of borrowing, trying to abate inflation. So it's kind of, you know, a lose-lose situation for some people in Britain at the moment. Interest rates are currently at 2.25%. According to The Economist, they're going to raise interest rates, where the highest we've seen since 1989 in this country, by 0.75%. But I've got a famous saying, which I always say to Innie, we'll just have to wait and see. And unfortunately, I'm going to repeat it, because we do have to wait and see. Yeah. And we know it's, you know, one day is a long day in British politics. So let's just see what happens tomorrow. All
right. Well, the markets love Rishi Sunak right now. It remains to be seen how long that love actually lasts. Thank you so much, Juliana.
Thank you, Laddie.
All right, that was Juliana giving us the latest there from the UK. Now we're heading on to other markets now, talking about the crypto space there. We see Bitcoin had a good weekend, but coming into Monday, not looking so good. We're seeing kind of a pullback in the crypto space this morning. If we look at the Fear Greed Index, this morning we're still in fear, better than extreme fear, which we've experienced most of we see it there, 31 points. Still, well, it's actually fear we're having this morning. But let's move over to the market cap there, see what's happening with the crypto market cap. We see it's still holding the $1 trillion mark, down 1.92%. This got to about close to a fraction of a billion there, but now we're down 1.92%. Volume traded $71.99 billion. That's down about 21% this morning. And we see Bitcoin dominance there inching downward from the 40% level to 38.92%. Let's look at the price of Bitcoin this morning now. It did try to hold that 20,500 level there. It's down 1.87%. Volume traded still high, as we've seen for a couple of days now. This morning, $33.14 billion. If you look at Ethereum there, it did hold the 1,500 level, talking about the price of Ethereum. It did hold that level, and we see volume traded for Ethereum also quite high this morning. Let's bring in my guest now, Mary Imasuen, join us via Zoom. Great to have you, Mary.
Yeah, it's nice to be here. Thank you so much.
Yeah, great to have you. So it's all about Elon Musk's takeover of Twitter right now. We did see Doge, you know, pump over the weekend, quite a big pump. And I'm wondering, is meme coin season back? Is this what stokes the next bull market?
Well, that's a really good question. So it's very difficult to say, because also around that time, Elon Musk did announce on his Twitter that Tesla will be accepting Dogecoin as payments. So we can't really say for now. The whole Twitter acquisition could also be a thing. But if you look at the crypto market as a whole, you'll see that the volatility of the crypto market really depends on some certain actors' behaviors. So everything is quite speculative. So it's hard to say right now. But if you look at it from the long term, usually it is coins that have utility that perform a lot better. So meme coins, I don't know, their utility, they don't have much of a utility. So I'm quite skeptical about that.
Quite interesting. And we know Elon does love Dogecoin very much, you know, this time. But, you know, it's going to be a very interesting week this week. We have the FOMC meeting. What are you expecting for, you know, price movement in crypto space?
Well, we're currently still at the bear market. There might be a couple of, maybe might be an increase here and there depending on the news that follows. But I think that generally the crypto space is in the bear market. It's not going to change much until next year. I believe that by 2023 we'll start seeing an increase in altcoins, but that's if the economy holds up.
Right, and obviously, this market actually reacts to, the rate hikes. There is that possibility, some analysts are saying maybe the Fed might not go full 75 basis points by December, but they are expecting 75 basis points, for the next meeting. But are you seeing a pivot, anytime soon?
Well, it is still hard to say. Generally, the price kind of fluctuates, especially during the Christmas season. But like I said, it's best to place your bets next year. I think by next year, we'll start seeing some significant changes in the market.
Quite interesting. What are you seeing coming for the metaverse? We did see, volume, trending downward for most of those metaverse tokens. What are you seeing going forward? Is that industry still going to hold?
Yes, well, a lot of things are happening in the metaverse right now, and more people are starting to see use cases of the metaverse. So definitely it's going to hold, especially like work situations where a lot of companies have chosen the hybrid and remote system. So now more people are looking into that. We've heard of big players in the market actually acquiring lands and metaverse. So there is definitely interest in there, and a lot of things are happening. So that is definitely a sector one should be looking into. It's going to be extremely significant for us in the coming years. A lot of work is taking place in that space as well. So for anybody who's interested or has been quite speculative about that area, I think it's something worth looking into because that is literally the future.
The future. All right. Thank you so much, Mary Master, for bringing us up to speed of what's happening in the market. Thank you so much.
You're welcome. Thank you, too.
All right, let's head back to the markets now. We'll see top alts by market cap. Let's see what's happening there. We see it's just BNB in the green on the top alts by market cap there. We see BNB $309. That's up about 0.40%. Want to get that on. We'll see Cardano there, down 4.36%, eCash down 2.05%, and we see XRP still holding on to that 45-cent level. Well, that's all for the markets, and that's it for Business Morning. Don't forget to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. And you can watch this again on our YouTube channel. Just go on YouTube and search for Channels Television. Flip over to our videos. You can see all our output right there. Thank you so much for watching. I'm Ladi Williams. Bye for now.